Is TD Bank the best bank to get a mortgage? Well, every lender in Canada has its strengths, but TD has some features that make it stand out in ways many people don't even know about. Now, in this video, we're going to break down TD's unique benefits so you can see if they're the right fit for your mortgage goals. Hey, I'm Jarrett White, a Canadian mortgage broker here in BC. I've been ranked amongst the top percentage of brokers nationwide, and I've helped hundreds of families make smarter decisions with their mortgage. My job is to show you what really matters when it comes to choosing a lender, not just the interest rate that they post online. Now, before we dive into what makes TD different, let's quickly clear the basics. Like all big banks, TDs offer variable and fixed rate mortgages, standard prepayment privileges, and use 1 to 5 year terms for their fixed rates. The penalties work the same too. 3 months interest for variable rate mortgages, and for fixed rate mortgages, either a 3-month interest or what's called an interest rate differential, whichever ends up being greater, and it's typically the interest rate differential. Now, first, TD has a major advantage when it comes to converting from a variable to a fixed. Every single major bank limits you. You're allowed to do this, but you can only convert into a term that's equal or longer than the one that you have remaining. For example, if you have a 5-year variable, you have to lock into a 5-year fixed. But TD is the only bank that lets you choose a 3, 4, or 5-year fixed, regardless of what's left on your existing term. That flexibility means you can customize your mortgage strategy around where you think the market is heading, instead of being stuck with a longer term than you want. Second is something called a replaceable mortgage. This is one of my favorite TD features. Here's how it works. If you refinance during your term and you borrow at least $20,000 more, TD essentially waives the 3-month interest penalty. Now, if your penalty would have been more than 3 months interest, they give you 3-month interest worth of it back. What does this mean in practice? Well, if rates drop with TD, then you can essentially go back to them and get that better offer. Maybe it's a special promotion, or maybe just the market has changed. You can get that better rate. You simply borrow the extra $20,000, lock into that new product, and then just immediately take that $20,000 and put it right back towards your mortgage. That way you're back at square one, but you have a better interest rate and you're saving money on interest. An amazing feature. Third is that TD is one of the fastest big banks when it comes to approvals, in my opinion. Unlike most lenders, they don't require all the documents up front. They do their approval based on the application that we send them. And then after that, they give us a list of conditions that we need to satisfy. A lot of other lenders require all documents up front. Now, where this can be helpful is if you get an accepted offer, we might need updated pay stub, updated letter of employment, bank statements. And while you're gathering that, we can still send it in and get it in their queue. Whereas other lenders, we would have to wait until we have all that stuff up front. This speed can make a big difference in your subject to financing period. Fourth is that TD can sometimes save you money up front because they don't actually require appraisals if the mortgage you're requesting is less than 65% of the BC assessment value of the property. So if it is within that threshold, they'll waive the appraisal altogether, which is an easy $500 that you're saving right out of the gate. Now lastly, TD does offer what's called a flex line, which is their home equity line of credit product, similar to what Scotiabank's STEP is, which is widely regarded as one of the best home equity line of credit plus mortgage products built together, and this functions exactly the same. What it does is when you pay your mortgage down, that money then becomes available for you to borrow in the form of a line of credit. This is definitely at a much lower rate than any unsecured line of credit or credit cards that you may have, and it's a great way to access equity. So is TD the best bank for a mortgage? Well, if you want flexibility in converting from variable to fixed, the ability to trade in your mortgage for a better deal, faster approvals, fewer appraisal requirements, and access to a strong home equity line of credit product, then TD is definitely worth considering. But like any lender, it comes down to your personal goals and situation. Now that's where I come in. As a mortgage broker, I work with TD, but I also work with dozens of other lenders across Canada. My job is to match you with the right mortgage for your needs, not just one with the most appealing interest rate. If you're buying, refinancing, or renewing, book a free consultation using the link in the description, and let's make sure you're not just getting a mortgage, but one that actually suits what you need. If this breakdown was helpful, I'd really appreciate it if you hit the subscribe button, ring the bell to be notified, and like this video, and stick around for more Canadian mortgage insights. I'll be making many more videos in the coming weeks. Thanks a lot for watching. Talk soon.